Alright guys, Jason Graystone here, Trading Powered UK. Just thought I'd put out a video to share with you what we're looking at this morning. It's Tuesday, just about to start the live room in a couple of hours. I'm just going through my pre-market analysis, and it's a bit of a different video. Just want to give you an insight into what's on the radar for today and into this week. So I'm going to start on the Aussie CAD. There's a few things setting up, there's a few trades that I'm in as well. So I'll start on the Aussie CAD and we'll move through the pairs. So there's a few pairs that I want to show you guys. So the Aussie CAD on the daily, we're now pushing up into this previous structure resistance level, this DSR level. We predicted a move up into 0-100 last week as well. We were looking at this area because it's also previous structure resistance here. We've got major structure resistance on the higher time frame, and we're back up testing this level now. If we draw a line into that level there, you can see that we've tested once. This is the daily time frame, remember, so we've tested once, twice, 3 times, 4 times, 5 times, 6 times. Okay, so it's a decent area. You CTS style traders, you might be looking at RSI going overbought. You might be looking for a double top or something like that on a lower time frame as your reason to get involved in this move to the downside. For me, as we drop down the lower time frames, so if we drop down to the 240, we were eyeing up a big bat formation up at 10071. Now this was playing out all week. We had our eye on this, and when I came back into the markets yesterday, last night, market had pushed up. Now it's obviously invalid now. I got involved at a much better entry at 10087, so I got a bit of a better entry, which obviously gives me a better risk reward. So I'm actually in this trade now. You can see X to A to B, B to C, and a CD completion up here. I actually got involved a bit higher, so it gave me a better risk reward. And if we was to draw on our risk here, and for targets, you can see you would have had to adjust targets slightly, but you're still getting over a one, or I'm still getting over a 1-to-1 because I entered a bit higher. So that's what I'm in at the moment. Target 1's down at the 382 at 99.81, and target 2's down at 98.97. So now for you structure-based traders or CTS style traders, you might be adding up your CTS score at this level and saying, well, I need RSI's already overbought. I'll just wait for a double top at this level. And then if you get a valid double top and you get some bearish divergence on the RSI, you might enter at market and put your stops and ATR above this high, which means you'll probably be able to, let's just bring on the ATR here. So you got a 30 pip ATR, so your ATR, your stop loss will be 30 pips above the high, which is going to put you at 48. So you can reduce your risks. So you can reduce your risk on the table and shoot for whatever targets that your trade plan allows. So that's the Aussie CAD. I'm actually in this big bat formation, so we'll see how this goes. Next pair I want to share with you is the Aussie dollar. Now the Aussie dollar is we were bullish, okay. We put in this high. We didn't quite test the highs that we were expecting yet. And then we've sort of broken structure here, putting in a potential rotation, and as we pull up, we're just pushing up to test this previous resistance level. We've also got this inside structure level here, which could form a head and shoulders formation. You guys familiar with head and shoulders formation? Okay. This would be the neckline here. Okay, and we've actually violated that. So some of you guys I know who trade head and shoulders are looking at shorting this market already. If you are looking for reasons to get involved at this level, if we drop down to the 60, you're going to see a couple of aggressive entry reasons down here. Anyone that trades advanced patterns, you're going to see that we've actually got X to A to B, B to C, and a CD completion up here at, let me just bring on the Fibonacci retracement. So we've actually got a Gartley completion up at 7662. And for anyone that uses Constellation, I think Constellation is showing a cipher formation in here somewhere. It wouldn't be a valid cipher for me, but it does complete at the same area. So two potential patterns completing in the same price level, which makes this a decent high probability trading opportunity. I entered this a little bit higher. I think I got in at 76.63, 76.65. So I'm in this trade as well. Stops above that 113 inversion, and targets down at the 382 at 76.43 and 618 down at 76.28. So there's my trade. It's on the table. Well, hopefully we can hit some profits in that later in the room. Pound dollar. You can see we've been consolidating for a while now. This is the daily time frame. We've been consolidating. We were bearish, hit the Brexit, we put in this new low. Then we've been consolidating ever since, right? And we're just pushing down to previous structure support, and you can see that consolidation's thrown on this cipher formation here. We know that consolidation breeds patterns because it's a combination of extensions and retracements in the markets, and when certain extensions and retracements are met in a certain order, we have rules of engagement met for these advanced patterns, and it's great to be able to earn some money out of this consolidation. So that's why it's so good to have patterns as part of your trading toolbox. So looking at the pound dollar, although we do have a cipher down here, my problem is I have a 100 pips stop loss rule, okay, a maximum 100 pips stop loss rule. So what that means is if my stop loss is a 113 inversion, or my stop loss is going to be down at 28.11, I also front run my orders by 4 pips on this time frame as well. So that's going to put me down at 28.07. Okay, and that means if I've got a 100 pips stop loss rule, that means I can't enter until 129.07. So if I'm entering at 129.07, we haven't quite come down to that area. 29.07, I'll be front running my orders as well on that. So I'll be down at 29.03. Okay, so this would be my entry. And I'm just keeping an eye on this cipher, because if we hit conventional targets before we push down and fill my entry level, then I won't be taking the trade. So what I'll do is I'll bring on my Fibonacci retracement, and I'll just keep an eye on whether market hits target 1. So I'll keep an eye on that 382. You can see we haven't hit it, haven't hit it, okay. And I'll just keep an eye on that. If we do push up and hit the 382 without pushing down to the price level that I'm looking to enter, then I won't take the trade. But if price action pushes straight down, then I can get involved down here at 129.03. So looking out for that. Any CTS style traders are looking at this area as well. So CTS style traders will be looking at this level here. So I just want to share with you a couple of opportunities on these yen pairs. First one, I'm going to go through the 60-minute time frame on the yen pairs and show you a couple of things setting up or at market. I'm in one trade on the dollar yen. I have an overexposure rule on the yen pairs. I can only be involved in 2 out of the 3 pairs in my portfolio, but there's potentially setups on all of them. So it depends what one completes first. I'm already in the dollar yen, so euro yen and pound yen, it will depend what completes first. So euro yen, what we're looking at is if market pushes up here, let's bring on our fib retracement. You can see we've hit that 618, which puts us on Gartley alert. Let's just check the C leg. Yep. So what we want to do is bring on our Fibonacci extension tool. And you can see we've got a bearish Gartley up at X to A to B, B to C, CD completion up at 11404. Okay, stops. Again, 113 inversion. With targets, I'll be using conventional targets here. target's down at 382. Okay, and target 2's down at 618 at 112.83. Now that's if market pushes up. What about if market pushes down? Well, if market pushes down, you're looking at a deep Gartley formation down here as well. And by deep, I mean we've pushed right down into that 618, almost touching the 786 on the B leg, which gives us a deep Gartley. And this Gartley will complete down at 112.21, so down here. Okay, and if you're looking to take this Gartley, then you can see that you're going to get a great risk reward because it's a deep Gartley, offers good risk reward. It means that the D completion point is going to be almost at the X point, which will allow us to get tight stops, targets up at the 382. So you can see it's a nice reward to risk profile there. And target 2's up at the 618. So it's over a 1.5 to 1 risk reward. So that's something to pay attention to on Euro Yen. So pound yen, we are down at previous structure support. So CTS traders will be looking at this area here. RSI has gone over, bought down here, and we're at previous structure support. So 1, 2, 3. Okay. So you might be looking for a CTS style trade or a double bottom. We've actually put in a double bottom here at market. So you can see that we were bearish, right? We came down, we tested this line, tested this level, which is previous structure support. We've put in this little double bottom here. RSI, you saw some bullish divergence on the RSI. Initial test, second test. Okay, we broke this retracement level here. You might be looking for a 2618 trade, which would mean you're waiting for a pullback now into the 618 retracement, and looking to ride this up to a retest of the highs. Now, if you're looking to get short, okay, because this is bearish, okay, and if you're ignoring the fact that we're at previous structure support and you're looking to get short, where would you get short? Well, the problem is this is the low. This is the new structure low. Okay, then we consolidated and then we put in a new structure low here. So the outside return is now anywhere up to here. Okay, previous structure support, resistance. This is the outside return. So if we pull into this zone and we're shooting for a retest of the lows, which would be the maximum, that would be the most that I would shoot for, purely because we're at previous structure resistance, purely because we're at previous structure support, we're not going to get a good risk reward, are we? Because we need to put our stops above this high. So what I'll be looking at is, there's two things wrong here. One, I'd have over 100 pips of risk, and two, I'd get an inverse risk reward. So I know that I want a minimum of a 1-to-1 risk reward. So if we've got an ATR of 34, say 35 pips, I know that my stop loss needs to go 35 pips above this outside return. Okay, so we're going to be up at 62. Right, 62 for stops. And if we're shooting for a retest of the lows, well, we can work out where our 1-to-1, where we get our 1-to-1 entry. If we bring on a Fibonacci retracement tool here, we can just use that 50%. And I know that I want just over a 1-to-1 here, so we can start to draw on our risk. Okay, so we've now drawn on our risk. Now we know that the kill zone is here, right? Because this is the minimum place that we can enter and get a 1-to-1 or just over a 1-to-1 risk reward, right? The next thing I look at is over 100 pips of risk. Now I can't enter over 100 pips of risk, so if my stop loss is a 132.64, I can't enter this until 131.64. So now, just by going through this if-then thought process, I'm meeting my rules, my stop loss rules, my entry rules, okay? And I now know that this is my kill zone. Now, if we was to push up into this area here, instead of having a look for RSI going overbought and a lower low, lower close candle and all your entry reasons, if you trade cipher formations, right, you're going to see that you've got an aggressive entry up at X to A to B, B to C, CD completion at 131.70, which will allow you to get involved in this trade aggressively, and maybe you shoot for retest of the lows, or you shoot for conventional targets, whatever your rule is for that. But there you have it. So there's a few opportunities, there's a few ideas there to get involved in a trade, whether you're looking to get short or whether you're looking for this as a reversal. Okay, so that's the pound yen. And the last thing I want to share with you is this trade that I'm still in. I'm just going to run through what I'm in and why I'm in it. We did have a deep Gartley formation down here. This wasn't the X leg for me. This was the X leg for me, and allowed me to get involved around this level here. So I got involved at 132. It still allowed me to get stops just below the previous structure support level. So I've got my stops just below this low here, down at 99.40, just below that 99.50 level, which means I'm still getting under 100 pips of risk, and I'm looking for conventional targets on this. So let's just bring on our fib retracement, make sure we've adjusted those. Yep, so target 1, 101.71, and target 2, 102.70. So that's what I'm looking at, guys. I'll see you in the live room. If you want to come into the live room, it's www.tradeempowered.co.uk. Click on the live room banner, or if you go to tradeempowered.com, we've got a Kills live room over on the New York session as well. So check it out. It's totally free. You can come into both rooms free this week because Charles is away. So we've broke the door down and we're letting everyone in. So good luck in the market this week, guys, and I'll see you in the room.